Hi, everyone. Welcome to our latest edition of our Lunch and Learn series at the Nature Conservancy. My name is Stephanie Singer, and we're so happy to have you all here. Really excited today to have Josh Vollmer. He is the Commodities and Risk Manager at the Andersons, and we're excited to have him. I heard him speak a few weeks ago, and we'd love to hear what you have to say, Josh.
Well, morning, everyone, and thanks for having me join you today. I've got a little bit of a slide deck that we're going to run through today and just talk through some things that are happening in the fertilizer market. And so it's been a really dynamic market and a lot to share here. And so the big thing really is Russia. And so Russia is really the latest piece in a evolving fertilizer market that has seen a lot of activity over the last 2 years. And so we are now on day 40 of Russia's invasion of Ukraine. And when you look at how far Russia has made it, not really very far. And so you think about it, they've made it to the eastern end of the country. They're starting to work their way in, but not very successfully by most accounts. And so Ukraine is about the size of Texas. And so you can imagine if you were to go and invade Texas, sorry about this, you would end up with a scenario where you'd probably go in and you try to attack places like Austin and Houston and Dallas. And that's exactly what the Russians have done. They've gone in and they've attacked some of the major towns in Ukraine, but a big chunk of Ukraine is not very heavily populated. And so you have this country of 45 million. You got a very large refugee crisis going on right now. 5 million people have left the country. And this is having an impact overall on the fertilizer market. And so you have this scenario where Russia is the world's largest fertilizer exporter. It doesn't mean they're the world's largest fertilizer producer, but certainly they're the largest exporter. And so that becomes very, very key. And apologies, I don't know how to hide this. So it'll probably just continue to pop up here over the next couple of minutes. But look at some of these stats. Number one urea exporter, number one ammonium nitrate exporter, number one ammonia exporter, number one UAN. So anything that's nitrogen based, they are one of the world's largest exporters. Number three potash exporter, 20% of global supply. And when you add in Belarus, you've talked about taking 40% of the global potash supply offline, the export supply. Huge impact. In addition, they account for 40% of European natural gas. And so that's kind of where it ties also in with the nitrogen piece. You need all that natural gas in order to produce this product. And so the latest news is, it happened a week or so ago that Putin decided, hey, if you're going to buy our natural gas and you're coming from an unfriendly country, you need to pay us in rubles. And the challenge with this is these are very complex contracts, typically long-lasting contracts, and you have to reopen that entire contract to be able to do that. And so what you're seeing overall is this world where a very large economy is now at war with the rest of the world. And so look at the world's largest economies. Most of them would be aligned with the allies in this current war. So you have the US, Japan, Germany, the UK, France, Italy, Canada, and South Korea, who've all come out against Russia in this war, and all have done some level of activity. You've got Ukraine, who's only the 57th largest economy. So you have David versus Goliath here. You have these very large, a very large country going after a very small one. And so, but in the grand scheme of things, if Russia were a U.S. state, it would be about the size of New York State, or maybe even Texas. And then if you were to look at Ukraine, their economy is about the size of Nevada. So you have basically Russia, let's call them New York against Nevada. And so you've got this really big state against this really small state from an economic standpoint. And the major thing to recognize here is that this is going to have long-term impacts on the entire globe. You're seeing this world where things were really, really steady for the long time. The Cold War ends, and the world had great stability for a long time, short of maybe some skirmishes in the Middle East and a few other places. And now you're seeing this globalization start to fall apart. And this is a really big story because we've built an entire global economy and even a fertilizer economy that's based upon free trade, and agricultural economy that's based upon free trade. And that's going to have a huge impact on food. It's going to have a huge impact on fertilizer. And this is something that we need to prepare for, and we need to start thinking through as a global economy, what happens to some of these areas that are heavily dependent upon Russia and Ukraine. And why do we even care? You got this small country, well, they have a whole bunch of nuclear bombs still. And so that's always the option. you want to try to avoid that to the greatest extent possible, but they've held over their nuclear arsenal from the USSR years. And this becomes a really big issue that you've got this natural resource rich country, doesn't have a lot of skills, doesn't have a very educated population, but boy, do they have the weapons from a prior area. And all this is kind of fitting together. The reason why Russia has so many weapons and an uneducated workforce is they put their money in weapons throughout the 90s until the US bankrupted and the Cold War came to an end. And then you saw this period of great stability. You saw the euro develop, you saw the US continue to be the world's reserve currency. And all of that is starting to fall apart. And you're seeing this firsthand in the agricultural markets. You have Russia, who has suspended fertilizer exports on many, many products so far. And some of them were their choice and some of them were the choice of other countries. And so you had people like the allies, as I'm going to call them, who basically made banking restrictions, made other challenges. And that has had a huge impact on the ability of product to be able to move. You're going to start to see this more in oil and gas, which we're going to start to talk about next year. But this has put the Russian oligopolies and the oligarchs at risk. And so Russia is really a dictatorship, but Putin's kind of made these deals with, let's call them about 50 oligarchs who either through theft or through savviness basically came into power after the fall of the Iron Curtain. And these guys, through some of their hard work and through some of their savviness and simply, for lack of a better way of putting it, just because of their theft, basically were able to build out these large companies. And so you have companies like Eurochem, Phosagro, and Uralkali, who are all run by oligarchs. And so when the world said, we're not going to sanction the companies, we're going to sanction the owners, you saw the owners of companies like Eurochem and Uralkali give up a good chunk of their ownership stake. Now, what happens after the war is over and whether they get it back is a different story, but these guys are still involved, and it still is leading to a scenario where people don't want to do business with these guys. They've self-sanctioned, they're not doing business. It's very, very difficult to be able to secure freight right now. You also have ports that just aren't very effective at moving big vessels out to be able to get product into the world market. And so this is more true in the energy and gas industry than in any other area. And so there is a major set of pipelines that run through Ukraine into Europe. And so keep in mind, I said before that 40% of Europe's natural gas comes from Russia. And so they're highly, highly dependent upon that Russian gas. And some countries are in a worse spot than others. So Hungary, for example, gets a pretty substantial portion of their gas from Russia. And so you can imagine that Hungary's probably not going to go along with a whole bunch of sanctions. They're trying to sit it out and see what they can do, even though they're under pressure from a lot of other countries to do so. And so this graphic just shows where is that product coming from, that natural gas. And so that red box there is showing the product that actually comes from Russia. It's a pretty substantial portion of it. And when you look at where the rest of it's coming from, places like Norway, Africa, and then a whole bunch of other sources. A little bit's coming in through LNG. And so you start to see the impact that this is going to have on the US. We're going to start to ramp up liquefied natural gas. We're going to put it on vessels and shoot it across an ocean, or potentially find ways to move pipeline gas from the Arab Gulf through Turkey and other places. But that is going to raise the natural gas price here in the United States. And this is the nature of an economic war, right? That everyone throughout the world pays for it. And we're not fighting a war where we have to send troops today, but we are all going to pay for this war through higher prices. And you're seeing this in fertilizer, you're seeing this in energy. If you look at the gas pump recently, gas prices above $4. All this is tied together. And this is going to have long-ranging impacts, especially if this war continues, because Russia is going to be unable to move their oil out. They're going to reach containment issues in their oil tanks. And you're going to see a scenario where product is going to have nowhere to go, and they're going to have to shut those oil rigs down. And it's going to take a long, long time for them to be able to restart these oil rigs. And so I am so convinced of this that I went out and I purchased a hybrid vehicle to be able to get another 25 miles per gallon, that this is going to be a long-term trend. And you're going to see this continue far into the future, that the US, our allies, are not going to be dependent upon Russian gas. And to be clear, the US is not dependent upon Russian gas or energy, but our European allies are. So even before the war started, Germany realized that Russia had a whole bunch of power over them because they were supplying so much of their gas. And so there was I believe it's a $11 billion pipeline that runs under the Baltic Sea called Nord Stream 2. It runs right next to Nord Stream 1. And it was designed to bring gas from the rich Russian area into places like Germany and bypass these pipelines that you saw a couple slides back, moving through Ukraine and Poland and some of these other countries. Germany decided, hey, we really don't want to have this level of an economic connection with Russia. So they held up the approval after the pipeline was done. So this is a $11-12 billion pipeline. It's finished, and Germany refuses to give authorization. So they've since decided that we're going to suspend permitting. So you have this pipeline that's now underneath the Baltic that is not going to get used. And so you have to make those gas deliveries up somewhere, and where that's going to come from is still to be determined. And so here's an example of where European energy prices are today. So if you look at the forward curve and the price of where it sits for the next year, gas prices are above $30 per MMBTU. And so this is substantial. If you look at the US price today, it is going to be a fraction of that. And I believe the next slide actually shows the price differential between the US and the European natural gas price. And so historically, European gas was always going to be a little bit more expensive, a lot more pipeline costs, not as abundant. After we went through the shale revolution here in the US, you saw that the US natural gas price fell substantially. But we are at historic highs in terms of what the pricing spread is. And so this is impacting European nitrogen production because they are dependent upon that really expensive Russian gas to be able to produce nitrogen over there. And it has a trickle-down effect. On top of that, you have a major ammonia pipeline that runs across Ukraine from Russia all the way to a port called Yuzhny. And so it pipes it into the Black Sea, produces 200,000 tons of ammonia. We're coming to the Black Sea every single month. And you say like, oh, how does that fit in the overall scheme? Well, think about what that produces. You can produce almost 400,000 tons of urea a month, almost 1 million tons of MAP and DAP. A lot of this product was going to Morocco to be able to produce dry phosphate. So you start to think through what that means to dry phosphate prices when you have both sulfur and ammonia prices, two key inputs to be able to make granulated phosphate there. It becomes very, very expensive. And so product has just gotten really, really expensive because the trade flow starts to change. And so this has a trickle-down effect on all fertilizer products. It isn't just ammonia price that went up. You start to see it in MAP and DAP, and then you start to see this very circular piece where other product lines are going to continue to move up. And so you say, well, why does this matter? You know, all this is happening across the globe. Well, this chart here shows, and this comes from the American Farm Bureau, it shows the US share of global nutrient use over the last 50 years, 60 years. And so you see back in the 60s, the US accounted for a quarter of the world's fertilizer consumption. And today we're just 10%. And so we're just one player in a global industry today, driven by global prices and driven by a need to be able to move product to the highest value markets and the folks who are most willing to pay for that product. And this is the beauty of a commodity, is it's able to be taken anywhere. It's the same product regardless of where it's produced, but different parts of the world are willing to pay different prices. And that's what a lot of the charts that you're about to see are going to show, that other parts of the world are willing to pay up more than the US farmer is for these products. And so I'm going to pop in and just start talking a little bit about some of these products, what the impact has been. And so even before the war started, you had a nitrogen market that was on fire. And that really related to the fact that you had this European energy crisis going on. You also had a Chinese energy crisis going on. You had these rolling blackouts in China that happened throughout a good chunk of the fall. And that was the fact that China is a massive importer of energy. You can see China starting to cozy up to the Saudis today, trying to be able to do some additional business with them. China needs to import about 80% of their energy needs. And so when things don't go well on a global energy scale, you end up with a scenario that doesn't turn out well for China, who happens to be one of the world's largest manufacturers. And so you have this scenario where China got angry at Australia because Australia said that China started COVID. And so China stopped importing Australian coal, which they needed to make urea. In addition, they had some other challenges. So you had China out of the market on nitrogen. You had Europe, who had to close down because of that Nord Stream 2 conflict, driving natural gas prices up. And so that got us through a good chunk of the fall. And so that's where you look at this point here, you had these crises throughout the fall, the price of urea surges. And then we got to the start of the new year, and the price started coming down. There wasn't a lot of activity going on. And then the war starts, and things went back up to a level that we haven't seen really ever. And so this is just showing the price that has the price increase that's happened since the war started. So up $400 from the trough to the peak. It's come off a little bit over the last couple of days. And that's really just because there's no activity going on. People are sitting on the sidelines waiting to see what's going to happen. And anytime that happens in the urea market, it typically slides backwards. It needs to be fed every single day. And this is the nature of a bull. You got to feed that bull every single day to make it continue to be hungry and want to continue to go up. And so if you go back and you look at when were the last times that we saw the urea price rise above $500, this graphic just shows how long that went on. And so if you look back at 08, which was very well known in the fertilizer industry as having a massive run up and then a massive crash, that went on for nearly a year. If you look at 2012, which was the last big boom that we saw, that one didn't last nearly as long as what we're seeing today. But the long story here to recognize is that this thing could go on for quite a while. And a lot of it depends upon how long the war continues to go on. My belief is that it's going to continue to grind out for a while. And you're going to see Russian oil and gas get cut off, and you'll see this thing continue to go on for a long time. Maybe it doesn't reach the price levels that we see today, but certainly you're going to see elevated prices for a long time. And this is going to have an impact on food supply too, because people start to cut back on fertilizer applications. And you got to remember, if you've ever read the Alchemy of Air, which is about the start of the nitrogen industry, we're at this point in the world where we can only exist and have the level of population that we have because of fertilizer, because of seed technology, because of crop inputs. And we've reached this point where you have to have these products to be able to feed 8 million people. And so it's critical that we as a nation, we as a world can continue to feed our world through fertilizer. And that is a big constraint going on because people are starting to cut back applications, which impacts yields, which impacts the amount of food that you have. And so all of this is interrelated today. Moving on to the price of UAN, you have a scenario here where UAN is just one more nitrogen source. You also have countervailing duties and anti-dumping suits that extend to both Trinidad and Tobago and to Russia. And so this happened even before the war. And so that is right around here when you start to see that price start to rise as a result of that. But it's only going to continue to probably go up as a result of what we're seeing. So we saw a $10 price increase from CF Industries yesterday on UAN across the board. And so you certainly have options with nitrogen. You could switch. Most people don't have the option to switch, but theoretically, if you could look at which nitrogen source is going to be the cheapest. And so today UAN is the most expensive, but that's normal. If you look at history, UAN is typically at a premium to most other products. Ammonia is typically your cheapest. And so when we saw that price decline in urea at the beginning of this year, you had this scenario where you had really, really cheap urea relative to the other products. And it just didn't continue. And once the war started, the normal relationship from a pricing standpoint resumed once again. And so if you look at the tri-state fertilizer recommendations and what it would recommend for nitrogen applications, the maximum return to nitrogen is the prevailing model on that. And so I went back and I looked and said, what was the price of corn in March in the last 4 years? And what was the price of UAN, which is the predominant nitrogen source used in the Eastern Corn Belt? And said, how does that compare? And so certainly you could look at the price and say, gosh, it's 4x what it was in 2020, and it's twice what it was last year. And the big difference is the price of corn. And so if you look at the average price of corn in March of this year, incredible price that you're starting to see. And if you look at what your profitable range, how many pounds of nitrogen to apply per acre, and this is the whole application. Typically you're going to split it. You're starting to see that it's recommended application rates very similar to what you saw in 2020 and actually higher rates than you saw in 2019 and 2021. And so this is a scenario where cutting back on nitrogen at today's corn price doesn't necessarily make a lot of sense for a lot of folks. And so this is just the graphic of what that maximum return to nitrogen would be in today's price environment. And so one thing that you could consider in today's environment, and it hasn't made sense for a lot of years, is really some type of a nitrogen inhibitor or a denitrification inhibitor or a volatilization inhibitor. And so one such example is Centura. So the Andersons started carrying this. It's a Koch product, Koch Agronomic Services out of our Lordstown, Ohio facility. And so you start to see, you typically get more bang for your buck from a nitrogen standpoint out of this. And so cost per acre is about $12, but the yield gain that you typically see at today's corn price, and just calling it a $7 corn price for the new crop corn, nets you $55 per acre on something like that. And so, one thing we're heavily encouraging growers to look at right now is, rather than just go out and broadcast across your acres, how do you get the most ROI from that acre? How do you get the most from your nutrient budget? How do you recognize that these higher prices are probably here to stay for a little bit? And the longer the war in Russia goes on, the longer you're going to see this scenario play out. And the less fertilizer folks use, the higher, the lower the yield is going to be, and therefore the higher the price is going to stay for a longer time frame. And so this thing could take us a couple of years to really work our way out of, especially if it continues for any reasonable amount of time. And so moving on to sulfur products, the price of ammonium sulfate is at all-time highs, and that's the nature of the price of sulfur being high, also the price of ammonia being high. And so it just costs a whole bunch more to produce this product right now. Moving on to dry phosphates, you continue to see very firm pricing from a dry phosphate standpoint. And that is, again, a trend that I don't see disappearing anytime soon. The big inputs that we've already talked about are up there. You're also looking at a scenario where China is out of the market. And so you say, well, why is that a big deal? Well, China is basically the world's largest exporter of dry phosphates. And so they have held on to products since last October. They've a little bit sneak out, but most of their MAP and their DAP they've kept in their country because they want to basically ensure that they're able to grow higher yield corn. They want to be able to grow higher yield rice in that country. And so initially they weren't going to re-enter the market until the second half of the year. And now the question is, will they extend that out and limit the amount of exports that they have for a longer term time frame? And so if they do, it's going to ensure that their domestic population has enough nutrient to grow their corn, their rice, other crops that they might need. Similarly, you have this scenario where Ukraine is one of the largest corn exporters. And so we're now at a very critical point, very similar climate to the US. And so they should be starting to plant here within the next month. And the question is, do they have the diesel? Do they have the fertilizer? Do they have the crop inputs that they need to be able to plant? If you go back to that very first slide when we looked at the war, you can remember most of the war has been in the eastern end along with a couple population centers. So most of the cropland is not affected today, but it's really a question of, do you have the inputs that you need to do this? And all that ties back, to phosphates and where it goes. And so Russia is a very large exporter of phosphates, not the world's largest, but certainly they play a very key role. And the bigger issue is that the US is trading at a substantial discount to the rest of the world. And so if you look at the price of MAP and DAP in Cincinnati, Ohio today, it's around $1,030. That same ton of MAP going to Brazil, I converted it to short tons, is going for about $11.75. And so we're at about $150 discount to the rest of the world. So if you were to go out and you were to produce products, say in Morocco, and let's just assume for a second that the US didn't have countervailing duties against Morocco today, and you could send that product anywhere, you still would not send the product to the US. So a lot of people are out there pushing, saying, hey, we got to get rid of these countervailing duties. What I'll tell you is they're actually not having any impact on the market right now, because we're trading at such a discount to the rest of the world that it doesn't really matter. You wouldn't bring that product, you wouldn't bring any imports into the US right now when you have this kind of a pricing spread, and you can send that product anywhere else in the world who's willing to pay up for it. And so here is another way of being able to look at the affordability of fertilizer. And so this is the barter rate. And so if you look at current cash price of corn against the price of MAP, and you said, how many bushels of MAP do I need to sell? Or how many bushels of corn do I need to sell to buy 1 ton of MAP? The price today is actually cheaper on a barter rate basis than it was in the fall application season for states like Illinois that do a pretty heavy fall application of dry phosphates. And so even though the price is up and it's higher, the price of corn has adjusted to reflect that. The other thing is because nitrogen prices are so high, higher input and higher nitrogen sources of dry phosphates are now just as expensive as lower nitrogen sources of phosphates. So MAP and DAP are trading pretty much at parity today in these markets. And if you look at last fall, MAP was trading at a substantial premium to the price of DAP. And so one thing to really stretch your dollars, if you're not in the mood for going out and buying a substantial amount of dry phosphate and broadcast spreading it across the acre, is to at least give that seed some level of phosphate to get it going, to get an early start, especially if you're planting in April, early May. And on top of that, to look at a microbial. So think about your soil health. Think about how do you activate the nutrients that are already in the soil. And so promoting the Anderson's Biopass product here. And so basically, if you were to look, this product, you apply 1 pint per acre to your field. A pint costs $9 or $10, depending upon what your retailer charges. And you get on average, from the field trials we've done, a 4.7 bushel per acre yield gain. So at $7 corn, you're talking about another $32 an acre and maybe $9 or $10 in expense. And so you're using your resources more wisely here. And you're really trying to stretch that ROI with products like this. And so I think that's where you're going to see some additional gain as the market continues to rationalize through price and cut back on the overall demand. How do you still make sure that your crops are being fed what they need to be fed? Moving on finally to potash. Even before the war started, you had Belarus, who was cut off from the rest of the world. And so if you go back a year, about last May, June, Belarus pulled some dissident journalists off of a plane. Basically, a plane was flying, a Ryanair flight was flying over Ukraine, Belarus. They land the plane, pull the journalist and his girlfriend off. They also had a election where they basically elected their dictator again. And so it inflamed the rest of the world. And so the US had put some monetary policy in place that prevented people from being able to deal with Belarus and Belarus Potash Company in US dollars. And so what you're seeing really with this war and overall is a weaponizing of currency. And so the reserve currency of the world is the United States dollar. And we've weaponized it to commit this war and to fight this war against other folks. And so this is one example where even without this war, you were seeing potentially a large chunk of the world's potash supply get cut off from the rest of the world. Maybe it wouldn't have been the entire 21% of world export supply that Belarus supplied, but it would have been some portion of it. And that's only gotten worse since the war happened. And so when that happened and the US said, hey, you can't deal in US dollars, Lithuania, who's a NATO member, said, hey, you can't use our railway to bring product to Port of Klaipėda here, which fed into the Baltic Sea and basically supplied parts of the world, including India, China, Brazil, and other parts of Europe, including Yara, which is one of the largest nitrogen and compound NPK producers. And so they said, oh, well, that's fine. We'll just bring it up to St. Petersburg. And the Russian oligarch said, nope, we're not going to do that. And so Putin said, hey, we'll build you guys a port up here. But that was going to take a year anyway. So that the supply and demand balance was going to get messed up even before this war happened. And now it's gotten a whole bunch worse. And so you've seen since the war started, the price of potash has gone up. And I guess my message today is I believe this price is going to go up substantially more, that today's potash price is a great bargain overall. And here's part of the reason why. It goes back to similar to what we talked about with dry phosphates. The US is trading at a substantial discount to the rest of the world on potash. And so if you had the choice and you are a Canadian producer, you work for Canpotex, which is Nutrien and Mosaic, combining their operations, and you can send product to Southeast Asia or the US, or you can send it to Brazil. You're probably going to send it to Brazil. And so this is why I know a lot of people are thinking, gosh, I'm going to cut back on potash applications. I would argue against that if this thing goes on for any length of time, today's potash price is going to look cheap. The price of grain is going to continue to rise, and you're going to see a scenario where you're going to want to have that potash on your field. And so as of today, if you could send tons anywhere, you'd probably send it to Brazil versus over to the US. And so it's making today's price look really, really cheap. Going back to barter rates again, once again, looking at today's corn price against the price of potash, cheaper than it was last fall. And we saw really strong application rates in places like Illinois, Iowa last fall. And I would encourage folks to continue with the normal potash application where the funds allow. So that is all I have for today. I guess at this point we can open it up to questions.
You're welcome to put questions in the chat or come off mute if you have questions for Josh.
This might be slightly unrelated, but there was one slide where you mentioned that the US went from 25 to 10% of using the global amount of fertilizer. Has there been any change in the amount of crops we're able to produce in that time? Like, how has that fertilizer decrease impacted our production?
Yeah, and this is the remarkable part about the crop input industry is because of advances in seed technology, because of advances in chemicals and herbicides and pesticides, you're seeing this world where we've seen overall that the world is producing more grains today than we ever have produced, even though we're not needing nearly as much fertilizer. And so it's been just the power of the human potential for us to be able to do this, that we're able to better utilize the resources that we have. And so you've seen on average, bushels per acre continue to increase pretty much since the post-war era as a result of that.
Josh, we do have a question in the chat. Kayla Miller asks, would Josh be willing to restate the title of the book about the start of the nitrogen fertilizer industry?
Oh yeah, yep. It's called the Alchemy of Air, and it goes back to if you think about the world before the modern fertilizer industry, we were using things like guano, or we were using different nitrates and trying to make the most of it. And so we were using Chilean nitrate, and at some point we were able to figure out how to take all the nitrogen that's in the air around us and use it and turn it into a form that can actually be used by plants. And so it's been it's a great story, but it's also part of the story where we're still using 100-year-old technology to produce nitrogen. And so now the world is starting to look at the next phase of how do you produce what we call green and blue ammonia, which relates to how you sequester carbon. So if you can sequester that carbon that currently comes out of gray ammonia, which is what the common ammonia is, and put it into the ground typically, you can get blue ammonia. And then if you can use electrolysis and other sources, you can create green ammonia, which has zero greenhouse gas emissions. And so this is where you got to wonder what the next phase of the nitrogen industry looks like. Hard to look beyond today, given the less than rosy outlook I just shared, but that was the direction we were heading in before this war started.
Do we have any other questions for Josh? You're welcome to come off mute and ask him directly.
No, well, appreciate everyone's time today, and thanks for listening. And I guess the final closing thought is that I know I presented a very bullish image today of what could happen, but certainly the longer the war goes on, and the longer that we engage in this economic war, the more you're going to see some of these things continue to come true. And so certainly it's going to have an impact on the globe. It's going to have an impact on the fertilizer industry. It's going to have an impact on the agricultural industry. And so it'll be interesting to see where things go, but very, very, very tight situation that we're starting to see develop.
Thank you, Josh, so much. And thanks for all of you that attended the Lunch and Learn today. I did put a link in the chat for our Farmer Advocate for Conservation program. If you're looking to build your soil health and reduce inputs, or you know a farmer that is looking to do that, they could hook up with one of our farmer advocates for conservation who can mentor them on practices such as cover crops. I hope everyone has a wonderful day. Thanks, everyone.